A company bought 535 Bitcoin. Days after announcing they might sell Bitcoin, a man recovered $400,000 in Bitcoin he lost. While high 11 years ago, using AI, the 30-year bond yield just hit its highest level since 2007, and BlackRock, the world's largest asset manager, is somehow involved in all of it. Welcome to the most chaotic, most important, most absolutely unhinged week in finance. I'm going to break down every story, what it actually means, and most importantly, exactly how smart investors should be positioning right now. Let's start with strategy, formerly MicroStrategy, because they are playing 4D chess while the rest of us are playing checkers. Here's what happened. Just days after Strategy signaled to investors they might need to sell Bitcoin to cover expenses, which, yes, sent crypto Twitter into full meltdown mode. They turned around and bought 535 Bitcoin for $43 million. Same week, same company. Buy and potential sell simultaneously. Is this contradictory? No, it's corporate treasury management. They're also moving to repurchase $1.5 billion of their 2029 convertible bonds using cash or Bitcoin sales. They're managing maturity walls, cycling leverage. This is how sophisticated balance sheets work. Michael Saylor didn't build the world's most scrutinized Bitcoin position by being reckless. Meanwhile, the market decided Friday was a great day to inflict maximum psychological damage. Crypto longs lost $500 million as Bitcoin slid to $78,000. Solana and XRP each dropped roughly 5%. And the reason? Always the same answer: rates. More on that in a moment. Oh, and Bhutan, the small Himalayan kingdom that was secretly mining Bitcoin using glacier meltwater quietly, moved another 100 BTC this week, pushing their 2026 Bitcoin outflows past $230 million. A whole sovereign nation was mining Bitcoin in the mountains, and nobody noticed for years. That's not a conspiracy, that's incredible. Here's why everything bled this week. The 30-year treasury yield hit 5.11%, a level not seen since before the modern iPhone existed. When the risk-free rate pays 5%, literally every other asset in the universe has to justify its existence. Why take risk on crypto, tech, or speculative stocks when the government will pay you 5% to do nothing? The Dow lost 500 points. Tech slumped. Bitcoin slid. This is not complicated. It's the same mechanism every time. When money costs more, risky assets get repriced. And it may not get easier soon. Kevin Warsh has just been confirmed as the new Fed chair, replacing Powell. Warsh is considered more hawkish, meaning rates could stay higher for longer than the market is currently hoping. This is the single most important variable for every asset class you own. Remember that. Now here's the contrarian bright spot nobody's talking about. Silver jumped the most in months this week. Silver has a dual story right now: inflation, hedge, and industrial green energy demand from solar panels and EVs. If both are happening simultaneously, which they appear to be, silver is a rare asset with fundamental support from two completely different directions. File that away. And Warren Buffett returned to airlines, a $2.6 billion stake in Delta Airlines. This is the same Buffett who sold all his airline stocks at the absolute bottom of COVID. His return is either a massive conviction call on travel demand or proof that even legends revisit their decisions. Either way, when Berkshire puts $2.6 billion somewhere, you pay attention. While everyone was watching price charts bleed, Capitol Hill was doing something that could reshape this entire industry. The Clarity Act is advancing through Congress, and it might be the most important crypto legislation nobody in the mainstream media is talking about. Here's the plain English version. Clarity tries to draw a clear legal line between what is a security and what is a commodity in the digital asset world. Section 105 specifically addresses whether an asset like XRP retains security status once a network becomes sufficiently decentralized. That's enormous. Fidelity has publicly backed Clarity, calling it a balanced approach that helps ensure the US remains a global leader in digital assets. CME Group just added XRP to its NASDAQ crypto index, ahead of the historic shift to 24/7 trading on May 29th. Machine learning models are pricing in a significant XRP move by month end. The institutional fingerprints on XRP are undeniable. On stablecoins, Circle raised $222 million from BlackRock and Apollo in a pre-sale valued at $3 billion. They simultaneously gave AI agents USDC payment powers. The The Bank of England is easing sterling stablecoin rules. Stablecoins are not the boring part of crypto anymore. They are becoming the infrastructure of global money movement. BlackRock this week backed Circle's raise, potentially weighed a multi-billion-dollar investment in the upcoming SpaceX IPO, which is set for June 12th, by the way, and helped catalyze a major crypto stock surge. They are simultaneously operating in traditional finance, crypto infrastructure, tokenization, and private equity. BlackRock is not dabbling in the future of finance. They are building it. And Fidelity International's first tokenized fund just got a top-tier AAA-MF rating from Moody's, the first tokenized fund to ever receive that rating. Tokenization of real-world assets just got its first credit rating. Think about what that means. Meanwhile, $4 billion in assets just switched from Layer 0 to Chainlink's bridge. Visa launched a new digital ID. Corpay is bringing stablecoin wallets to corporate payments. The pipes of global finance are being quietly, relentlessly replaced, and most people have no idea it's happening. Ethereum closing the gap with Solana. DEX volumes converging near $45 billion. Vitalik just signaled ZK payments as the next global standard. JP Morgan says Ethereum won't hit $5,000 without improvements, which is basically the institutional version of I don't get it yet. File accordingly. Solana, DeFi Development Corp, a Solana treasury firm, reported 108% yearly growth in Solana per share. Your savings account is doing maybe 4.5%. Just let that sit. Cardano, whales now hold 67% of ADA supply, highest concentration since 6 years ago. Analyst Tilal Kuchukar says the chart looks incredibly clean with a $4 target. Whale accumulation at this scale is typically smart money quietly loading up. Watch it. Dogecoin. The Doge OS founder says the ecosystem has crazy things on the horizon, and crucially, it's growing beyond Elon Musk's sphere. Any asset that starts as a meme and evolves into independent utility has genuinely matured. That's the signal. Real quick, let me hit the wildcard stories because these are too good to skip. First, a man forgot his Bitcoin wallet password while high, was locked out for 11 years, and then used Claude AI to recover $400,000 in Bitcoin. This is the greatest advertisement for both long-term Bitcoin holding and artificial intelligence ever produced. Never throw away your old hard drives. Never. OpenSea announced that new NFTs will include physical assets, Pokemon cards, and Rolex watches. This is either the moment NFTs finally found their killer use case, authenticated luxury goods and collectibles, or it's the world's most expensive pivot. Either way, it changes the story. Cannabis use just hit record highs, while alcohol use falls. Economically, watch the spirits sector. It has a structural headwind quietly forming. Cannabis companies and alternative beverage brands position accordingly. Oh, and a crypto conference had a pole dancing party and is now losing sponsors. The industry spent years trying to escape the crypto bro casino reputation. Progress, it turns out, is non-linear, and the Seattle Seahawks teamed up with PayPal for fan-to-fan payments and digital ticket processing. Sports plus fintech integration is how financial companies buy brand loyalty without anyone noticing. Alright, here's how smart money positions after a week like this. 8 moves. Fast. 1. Don't fight the bond market. At 5.11% on 30-year treasuries, cash is not a zero return position. T-bills paying 5% is strategic optionality, not laziness. Reduce leverage until yields stabilize. 2. The Clarity Act is a regulatory catalyst. Watch XRP, Ethereum, and Solana. If it passes in its current form, assets with clear commodity classification get a repricing event. The institutional positioning is already happening. Don't wait for the headline to act on the headline. 3. SpaceX IPO on June 12th is the event of the summer. Understand lockup mechanics before committing. The first day price is rarely the best entry. Patience is a strategy. 4. Stablecoins are infrastructure, not just cash equivalents. The play is owning equity in the companies building on top of them, not just holding them. 5. Ethereum's tokenization narrative just got a Moody's credit rating. JP Morgan's skepticism is historically a 2-year leading indicator before they launch their own product on the same chain. ETH is a long thesis, not a trade. 6. Silver is setting up. Industrial demand plus inflation hedge. It tends to lag gold and then outrun it. Don't sleep on the metal nobody's talking about. 7. Cardano's whale concentration at 67% combined with a clean technical setup and a $4 analyst target. This is a speculative position, not an investment. Size it like one. Defined risk, clear target. 8. And this is the most important one. The biggest risk right now is a liquidity mismatch. Know which of your positions you can actually sell if you need to. Know when your liabilities come due. Strategy is a masterclass in managing this. You should run the same model on your own portfolio. The lesson this week: structure beats sentiment every single time. The money that wins isn't reacting to the headlines. It's building positions before the headlines exist. The investors who look back on 2026 and say, that was the year that changed everything, won't be the ones who called every price move. They'll be the ones who understood the architecture being built underneath all this noise and stayed patient enough to let it play out. If this video added value, subscribe and drop a comment. Stay liquid and stay sharp. Peace.